markets and where we're headed from here. Ajit Banerjee from Shriram Life Insurance is now with us to talk about markets and the way forward. Ajit, thank you very much for joining in. I think the question now is, will this rally fizzle out? We've had 2 good days on the trot. Or do you expect what we've, what's played out over the last couple of, days in terms of the election verdict can result in a more long-lasting, durable kind of a recovery in the market? Where would you stand on that?
First of all, good morning, Rima, and thanks for having me in the show. So I think much was expected, I guess, from the market after it almost fell down to 10%, that what would be the outcome of the election results. And since it has turned out to be, favorable for the ruling dispensation, and because a lot of, the underlying projects and all was in a work in progress status, so the fear was that what would happen if the government changes, then what will be the fate of the projects? And therefore, the company is executing that. So now, since, I think the election results have become favorable, so I think that has given a bit of a impetus to the market to actually, once again rally. Now the question is, whether this rally again is a short one, or we feel that this is the end of the low what we saw, and it is going to go up, going forward on a regular basis. Now my take on that is that I think this is not probably the end of it, in the sense that few things has happened actually, which has triggered this market correction. One was certainly in the run-up to the US election, what would be, which is the government which is going to come over there. At the same time, the US dollars appreciating, so the US bonds, as a result of which there was a flight for safety which happened. And to add to that, it also compounded with the fact that, the earnings wasn't that good at all, and valuations didn't justify, the earnings which came out. As a consequence of that, I think we saw what we saw. Now, the silver lining is certainly, because structurally India's story is still, is strong. And we expect that it is going to be, there would be some minor, mean reversion in the process, as well as some, certain amount of, sanity which will prevail. As a result of which we are seeing all this. But I think this is, we can expect possibly, few more, key dates and the events to watch out for. One would be certainly the next, GDP numbers, which is going to get released on 29th of November. Thereafter, the RBI policy rates, as well as, ultimately, once the government, new presidential government in US takes office, what is that finally there, starting their policies on? Is that something what was mere a poll campaign also becomes a reality? I think there are certain things moving parts which we need to, observe before coming to such conclusion.
Okay, so in that case, Mr. Banerjee, what are some of the sectors that you are focusing on right now? We've spoken about how government spending has been on the lower side, but second half could be better. Some sectors that you think are at reasonable valuations now after the fall that we've seen?
Hi. So actually, I think, as I mentioned, that, there is no, I think, two-way on it, that the government spending on the infrastructure, or rather the infrastructural spending in the country will slow down. It may so happen that the mantle which was primarily, carried by the government in the preceding 3-4 years, that is something which might, be now passed on to the, corporate, the private sectors. And we are seeing that already. So actually, some data points I was looking at shows that there has been already around 6-7% increase in the Capex allotment by the private sector, which is not a small number by any means. And therefore, the sectors which looks bright at this point of time, connecting all the dots, remains certainly industrials. At the same time, the consumption sector. See, one data, very, interesting set of data comes that, the spend pattern of the Indian consumer sector has changed quite a lot. So just to, give up, a number to it, we have seen that in 2000, actually the household consumption spend on essentials was close to about 87%. Now, the same number in 2022 has come down to 79%. And actually in 2030, it is expected to go down to 61%, and the rest would be taken up by the discretionary. So I think that is also something which we are seeing in the behavioral pattern, and also the sectors and the companies associated with that. So I think we are positive hotels and retail, all that stuff. At the same time, if the private sector capex as well as the consumption has to play, then certainly financials, without a proper support from the financials, it cannot ultimately get translated. So that is something which we are also looking at. And within financials, again, large size banks as well as large NBFCs or shadow banks, as we say, that is something which we are quite positive of. At the same time, I think energy, if we have to say continue with such a mega scale of infrastructure as well as consumption, then energy is something which still we require. And it is not only the renewable energy, even renewable energy takes a time to shape up. But till that time, I think our existing energy sectors will also require a good amount of investment, and that is something which we are certainly quite bullish upon, keeping in mind the way the India story will play out.
So industrials, consumption, energy, large banks, these are the sectors that you're overweight. But just zooming in on the consumption, the theme that you spoke about and how the consumption patterns have changed. The household spending on essentials has fallen from 87% in 2000 to sub 80% now, and it's expected to further go down to 61% by 2030. Yeah. So in the discretionary pack, if someone has to buy, keeping in mind a 5-year horizon, say till 2030, where are the pockets where the risk reward is favorable right now? How would you put any actionable ideas for our viewers?
So I think, what we are seeing, even if you, classify that data further, we are seeing that the changes has happened significantly. Even, for example, if you look at auto, what we are seeing is that two-wheelers, within two-wheeler segment also, the high-end two-wheelers are selling quite a lot. So certainly, that is something which is finding a favor at this point of time, and this trend is likely to be. Even in the realty sector also, the consumption pattern of the households has been, in excess of say 1 crore houses and all, are something which is just, immediately getting, I think picked up as and when the projects are getting announced. So that is the trend which is likely to be there, because overall we are seeing that a good amount of increase in the spend pattern as well as the household income is also increasing. So naturally, these are something which is going to be, one of the focus. At the same time, within education, if you see, education also, there is a good amount of tendency, what we are seeing now, to, offer the either the highest type of education in terms of, sending abroad, or even, the education, the cost of which has gone quite significantly up, that is also finding a flavor. At the same time, if you see in the jewelry pattern also, so in our younger days, we used to see jewelry was more of an unorganized sector, whereas now we are seeing a good amount of organized sector which is there in the jewelry, and actually, the volume and the performance speaks that how the trend is shifting. Similarly, if you look at the pharma sector as well as medical services, so healthcare services rather. So I think insurance, those are the things which will certainly be more, I would say, considered for consumption in the discretionary space, to respond to your point.
All right, Mr. Banerjee, thank you so much for joining in today with all those insights. It was an interesting conversation, but time for a short break. We'll get you more on the markets on the other side. Stay tuned for that.